All right, what's going on, guys? Hope you all are doing well. Bit of a busy day today, but I wanted to do a chart markup for you guys. We haven't done this for the community yet. Usually, I just save it for the mentorship program. So I'll be marking up my charts. I'll be clearing them, marking everything up, seeing what we're working with. The only one that I won't do is USD JPY, simply because if you guys did take advantage of that trade, we're just going to leave it for now. Let's move some of this around. Okay, we should be good to go. But other than that, you guys can just, relax, watch me mark up the charts. You guys can feel free to mark up your charts right along with me. And this will be recorded, so you guys can feel free to rewatch it for the next 7 days. All right. So with that being said, I'm going to go ahead and go back on mute. And in a couple of minutes, we're going to start marking up the charts. I'll say like in about 3 to 4 minutes. We're going to wait for everyone to get in, get packed out. Right now, we have about 173 individuals. Let's see if we can get to 251 before we start everything. So we're going to mark everything up from top to bottom. And if you guys do have any questions, you guys can feel free to drop them in the comments. All right, but remember, I won't necessarily be doing any teaching. We're just going to strictly mark up the charts. All right. So let's give it a couple of minutes. Let's wait for us to get packed out. All right, we're at 189 now. We're gonna wait till we hit 251, okay, because then that'll pack out this specific webinar, and then we'll get started. So let's just give it a couple minutes. All right, so that was pretty quick. We're going to go ahead and get started. I'll be on mute. You guys, of course, can drop your questions on anything that you all have. If it's a specific question that's related to the mentorship program, all right, I'm not going to necessarily answer it. Okay, you have to become a student in order for me to answer certain questions. But everything else is pretty much fair game, so feel free to drop it, especially if it's based around any of the pairs that we currently trade right now. All right, so let's go ahead and get this started. All right, so as you guys can see, we started off on the monthly, worked our way to the weekly, then the 3-day time frame, and now we're on the daily. So now that we're on the daily, right, after working off of the higher time frames, now we can start to get into our refinements. All right, so let's do that. This is also a liquidity point of interest. All right, students of mine, you guys already know how powerful this point of interest is right here. Okay, so when price taps into this region, okay, more than likely we are going to catch a buy trade off of this. It doesn't really matter if it's counter trend. Price more than likely will react to this, give us some type of percentage into some type of supply that forms here, or maybe whatever supply is left here. Who knows? We have to wait until it forms. And then we can take advantage of price not only moving to the upside, but then price moving back to the downside, because we're expecting all of this to be taken out. This should be taken out. This should be taken out. If you did have those buy positions that we were looking at right here, feel free to go ahead and delete those buy positions. All right, simply because just going based off the higher time frame, let's just wait until we catch this retracement instead of taking advantage of this retracement here. All right, so we're gonna, price continue to push to the upside as it was on the H4 time frame, right? We were looking for price to tap into this region here before giving us that push. It's already done all of that, so if you do still have those buy positions here resting, okay, feel free to go ahead and delete those for the time being. Let's go back to the daily time frame. Let's finish up our refinements. So as it relates to the DXY, so my bias has changed slightly, right? I was just back testing, looking at everything this weekend. I'm thinking price is going to, there we go. I'm thinking price is going to pull to the downside, right? Or that's what I want to see happen. I want to see us essentially interact with this demand here, okay? And then I'm going to take a certain trade off of this demand when the supply comes into the market. Now, really, I don't really care about sells, to be honest with you guys. I want to see what price does when it pops into this liquidity point of interest. Now, if we continue to push to the downside and we have some type of liquidity point of interest that forms, we'll be on it for that push to the downside, right? But until that liquidity point of interest forms, for the time being, it may form here. We just have to see what happens. Oh, testing, testing. Hello? All right, we're back. So we could have something formulate here, right? We just have to wait to see what happens. Like this is one of those things where you can't really speculate. You have to see, the footprints form. So price pushes to the downside here. We may have some type of liquidity point of interest here, possibly. Look for price to trade back into, sell back to the downside. So for the time being, I'm going to take advantage. Let's just wait. Let's just see what happens. No need to speculate or, have any type of um, prediction. Let's just take advantage of price, right? So as it relates to, the higher time frames, as you guys know, my focus is mainly on the higher time frames. Day trading, you really don't need the higher time frames to day trade. But if you want to, position trade, swing trade, things like that, those higher time frames are going to be your best friends for sure. Even as my older students know, right? Like I used to be on the H1 time frame, H2 time frame. Then we graduated to the H4 in the daily. Now we're using the weekly, the monthly, things like that, right? Like those higher time frames are definitely going to be key in order to consistently produce the results that you guys want to produce. All right. Even if the market isn't really doing necessarily what you want it to do or what it was doing previously, right? It doesn't really matter. What matters is sticking to the plan, right? And that's why signal services, right? That's why signal services, a lot of retail traders think signal services are trash, right? But the market has ebbs and flows, right? So even as you guys can see, January, phenomenal, right? December, we didn't really count December, but still the trades were very, very good in December. November, absolutely phenomenal as well, right? February has not been the best month, right? Now, our day trades have carried us, right? Our day trades have definitely carried us and pulled the weight for this month, but higher time frame, not necessarily, right? We'll go over the EJ loss as well. But this is all a part of being a trader, right? Because the strategy hasn't changed at all, right? The strategy is still the same. So what we have to do is we have to continue to implement what we know to implement, even when we feel like the market isn't necessarily doing what we want it to do, right? Like for me last week was a losing week for me if you're not considering day trades, right? Like if I ignore my day trades and just focus on higher time frame trades, which is really where my main focus is moving forward, it's really the higher time frame. It was a losing week, right? But that happens. And so what I had to do is remind myself that, hedge funds have a down week. Businesses have a down quarter. There are also hedge funds out there that have a down quarter as well, right? One week does not define you as a trader, okay? And that's just a little tip. So someone put in the comments, hey, Mac, I've been having a hard time applying the strategy even when I do go through losses. I don't know if you're a student of mine. I don't know which strategy you're talking about, but you know, it's just the ebbs and the flow of the market, right? Whenever you have a loss, just look at it as a business expense, right? Look at it as, you know, I have to give, something back to the market, right? And that's exactly what, we do when we take losses and things like that, right? So keep your head up, all right? Stay motivated, okay? Don't allow the market to define who you are. You define who you are yourself, all right? Just keep those types of things in mind for sure. Hey, Mac, thank you. I really appreciate it. Yeah, man, for sure. For sure, for sure. We all have bad weeks. Yeah, so keep that in mind. So as it relates to USD JPY, right? DXY, the DXY. So we can definitely take advantage of the DXY. But I think I want to take sells. I think I want to take more advantage of sells than buys right now. We'll wait to take buys maybe when price taps into this region here. Okay, this liquidity point of interest for all my students. You guys know how important that is. So I would rather look for buy positions here. And if we understand that price is going to gravitate towards this area, we might as well just, expect that to take place, anticipate that taking place, and go ahead and start looking for possible sell opportunities down to this region here, right? Now I'm probably not going to release any like counter trend signals as it relates to this push to the downside. Students of mine, you guys can feel free to take advantage, but as it relates to the Telegram community, we will be looking to take buys here, okay, simply because this hasn't been the best month in the world if we delete day trades. But this community the purpose of this community wasn't for day trades to begin with, right? Day trades are just to carry us if the higher time frames are slow or not, flowing how we would like them to flow. But this is really based on the higher time frame because that's how you guys are going to consistently pass those FTMO challenges. It's not going to be day trading. Day trading is a skill set that you can use to, have a return on investment, right? But it's not going to be day trading is not going to be something that you guys want to use, when your emotions and your psychology is being pressed. When your emotions and your psychology is being pressed, you want to use something that is a little bit less stressful, right? Something that you don't have to really think. Day trading, you have to think a lot. You have to stay on your toes. You have to contemplate. You have to, it's a lot that goes on with it. Higher time frame, it's not. It's just macro, micro, entry schematic in the proper area, and you take the trade, right? Now, someone's asking, Mac, how do you choose what zones to trade from? That is a part of my course mentorship program, all right? So I'm not necessarily going to go into depth with that, like the difference between a regular point of interest or a supply and demand point of interest or a liquidity point of interest, right? Like there are different areas and there are different things that we do at those different areas. But that's a part of the mentorship program. Feel free to join. I would love to have you aboard. And we can definitely break that down. Let's see how this trade is doing. If you guys didn't take this trade, that's completely fine. It's way, right? It's Sunday. Really, I wanted this trade to hit last week. Let's see what happens with this. But my expectations for this trade, I have none for the individual that's asking, right? Like if it runs, fantastic, great. If it doesn't, so be it, right? Then we'll take advantage of possible sells here. But we know the apex of the demand is here, right? So if you guys are in this trade and you want to close, feel free. It is Sunday. Keep that in mind. I really don't trade on Sundays. So, but we're going to leave this here since, I forgot to delete the alert and it was sent to everyone. So we're just going to leave this here and move on to gold. So I'm going to go back on mute and then let's continue marking. So for possible buys, we're pretty much the same analysis as last time. It's a little bit more refined than last time, and you guys were able to see, my thought process on these points of interest. But very, very similar to, what we had last week. And this is really just based off the daily time frame, with some refinements on the H4, H2, things like that. But it's really based off the higher time frame, which works best with gold. Higher time frame is always going to work best with gold. All right, so AUD USD. Since I day trade AUD USD, it looks like it's a lot going on. So what I'm gonna do is, I really don't want to clear everything, to be honest, because I do day trade this pair quite a lot. So what we'll do is, maybe I'll just delete some stuff for the time being. Let me see. I paused the screen, give me 1 second because I'm going to clear some of the weekend session information that I have on my chart. Give me 1 second, guys. Let's go ahead and delete some of this. You know what? Should we delete everything? Maybe we will. Let's see. Yeah, let's go ahead and delete everything. Fresh start. All right, here we go. All right, so start on the higher time frame and then we'll work our way down once again. So someone is asking, Mac, why do you use the higher time frames when you could just day trade on lower time frames? Okay, so why do I use the higher time frames? So as you guys can see, okay, let's go to the lower time frames, such as the H1. If we're on the H1 time frame, right, what would you guys be looking to do right now? Feel free to drop it in the questions tab. What would you be looking to do on AUD USD based on the H1 time frame? Buys. I would look for a buy position. I would wait until demand breaks supply and look for a buy, look for price to go up, increase in price. Right. It seems like a lot of people would be looking for buy positions. Whereas when you use the higher time frame, right, we can see that we're simply just in a retracement. The price is trending to the downside, right? Which is very, very important. We've been swept liquidity below this area here, right? So price may want to do what? May want to run here, all right, which was responsible. And I don't know if you guys remember this, but I remember buying all of this to the upside, great times with the, for anyone who used to trade technical analysis with me, we had some great buy opportunities all throughout this region here. But anyways, so we have demand here that was responsible for taking out supply, right? So price may want to tap into here. Then we have, another area where demand comes into the market. Price may want to tap into here. We have inefficiency here. We have inefficiency here, right? So in the higher time frame, it gives us a more clear picture on what price is actually doing versus staying on the lower time frames, and us thinking that price is doing, this or that. All right, so that's why I use the higher time frames. All right, so both of these areas here are liquidity points of interest. All right, we can definitely have a little bit of patience and see how price is going to react within these regions. My favorite trade to take advantage of is when price interacts with some type of supply or demand, fails or respects that type of supply or demand, and then we take a trade from there, right? So right now we can see that this liquidity point of interest that we have marked up here, all right, based on the higher time frame, could possibly give us a really decent opportunity to look for sells. Now, if demand holds, okay, and really this is, even though price is buying here, right? Like we're pushing to the upside here. We obviously ran into some type of supply. Now we're pushing to the upside. The thing is, what's in control, right? And what's actually in control is supply right now, okay? Even though price is pushing up here. But let's say we interact with, the supply here and price continues to push, up and through it. Okay, and that means that we can definitely have some type of trade for the next leg to push to the upside, which is what we would be looking for. All right. So as it relates to, like, let's say as it relates to maybe the H4 and lower, all right, on these breakdowns, that is where we will, let's talk about that within the daily updates for the Telegram community. All right, we'll do it like that. All right, you know what? Let's do it like this. So we went over, or we marked up DXY, we marked up gold, we marked up AU. Let's save Euro USD, Euro JPY, and GBP JPY. We may do GBP USD as well. Let's save those pairs for part 2, right? We've been on this for about an hour. I don't want you guys to be too bored, but maybe we'll save it for part 2 for later on this week for you guys to take advantage of, right? I know a lot of you guys like to see my charts being marked up and things like that. So I figured, we would provide that opportunity for you guys. With that being said, I'm actually gonna go ahead and wrap this up here because I don't want you guys to be bored. And then what we'll do is we'll keep going like with Euro USD, which I have a lot to clear on Euro USD as well. As you guys can see, a whole lot to clear. But as it relates to like Euro USD and things like that, what we'll do is we'll take advantage of that, on the next webinar that will take place this week. All right. Hope you guys enjoyed it. If you guys did enjoy it, let me know. Maybe we'll do these more often. I want to add more than just, outlooks to the trading community. So maybe we'll do these more often for you guys. But I'll catch you guys on the next one. Much love. Peace out.